What is going on, everybody? And welcome to another weekly update where I like to provide you some upcoming events, some stock picks that I'm looking for in the upcoming week. I also provide daily updates. If that is something you're interested in, consider subscribing and hit that like button. So, going into this week, there is a lot riding on this week, uh, given the events that are going on. Now, as far as current earnings, like I've stated before, there are earnings still going on, and there will continue to be earnings. I think one of the ones I'm really watching is MU, but that isn't till later on this month on the 28th. So I will not list that here. Normally, when I do list earnings, I typically just try to give the current week. Sometimes, if they're really big earnings, I try to give at least 2 weeks out. But we all know current events, Russia-Ukraine war is weighing heavily on what is going on in the market. We need to be mindful of this, as this can essentially change the direction of the market very quickly. Uh, Things can escalate to even more than they already are, and the market could crash, or not crash, but the fear can come back very quickly when it comes to what's going on over there. Also, ceasefire. There's been a lot of talks, but it's been back and forth. The talks aren't really making any progress at all. But if for some reason there is a ceasefire, you have to also keep in mind that the market can essentially turn around and rocket from that point. Um, so that is still, even though we are aware of it, whatever news comes out is a complete guess. We don't know what's going to happen. We don't know how long it's going to take. The longer it does take, that what we do know is it's going to drive inflation through the roof, especially with all the sanctions that are going on with Russia and Ukraine. So we have to know that future earnings are going to be hit pretty hard. Now, we're not going to really understand how hard it's going to be hit until Q1 earnings, which is about a month or so away. Possibly it's about 2 months away from right now, about a month and a half. So we'll see how that does play out. But the biggest thing going on this week is on Wednesday. We have the FOMC announcement of Fed funds rate. So we're going to actually see what the Fed is going to do, what point basis they're going to come in with, what they're doing with the bonds. As far as we know, they are going to completely stop bond buying from what they said last. And then they also said that there'll at least be some kind of at least 25-point basis move. A lot of them keep bouncing back and forth, just like the Russia-Ukraine news. You get mixed messages, and this week we should know exactly what they're going to do, at least in the meantime. And they have to do something, so they'll take some sort of action. They'll stop the bond buying. As far as a 25-point basis move, they may announce when that will be, or they may actually say that they're going to implement it by the end of the month. We have to see. But one thing is for sure, they can't come in too hawkish, but they need to try to combat inflation. So, with that being said, they have to do something. They cannot do anything, even with everything going on with Russia and Ukraine. It is a really bad situation, and it is escalating very quickly. Essentially, the Fed should have done something a couple of months back, like everybody expected. But I think at some point it was, in my mind, at some point, and this is strictly my opinion, I believe it was transitory. But then you came into this year, with just supply chain issues because of the pandemic. Everybody was playing catch up, and we were getting to that point. To where we were catching up. Then we got hit with Russia and Ukraine. Again, completely left field. No one came into 2022 expecting a war, and that's exactly what we got. And so, being said, this is going to can get ugly quickly, and I think it's going to get ugly quickly. But how is the market going to take that? Again, you still have to understand there's a separation between what the stock market does, and what economics do, right? The economics does play a big part into it, but the stock market will still push, right? You have to understand that. You're still seeing um, strength in the market. You can see it in the candlesticks. You can see it on the bounces. So you have to be completely mindful of that. You can't mix the two. Yes, some things, yes, they do play into earnings and stuff like that, but it's not going to stop the market from running. Right now, why the market is chopping so much is ultimately because the uncertainty from Russia and Ukraine. If this lasts longer, that's going to put a huge damper on supply, and so that is what's the concerning part for the market is, okay, well, how much we've priced in quite a bit from now. So we have 15% priced in, right? You're talking about the index. That's not saying individual stocks. Individual stocks have been hit anywhere from your big techs from 30% all the way up to like 80%, some of them 90%. So yes, some stocks have been hitting bad. Things have been normalized. This is what we've been talking about all the way up to this point, right? Inflation is going to normalize all these stocks that have been running ridiculous high numbers for no particular reason. For PE, however you want to go buy it. A lot of these things are especially a lot of growth stocks are being based off of forward predicting what's going to expectations for the future, right? And so that's why a lot of these stocks have ran so much, and then some of these stocks that didn't deserve it, right? This is why they're getting hit 80-90% off of their all-time highs. And so don't fall into the trap and think that these stocks, especially these mid-cap, lower-cap stocks, they're going to run back to the numbers they were last year. It's not going to happen, not any time soon. Maybe 5-10 years down the road, possibly. But right now, what we're dealing with, and this is why I can always keep reiterating that you need to be focusing on the industry leaders, because this is how monopolies are essentially built, is in periods like this where these bigger companies that are almost recession proof can come in and buy and gobble up all these smaller companies. So being said, you have to be mindful of that and focus where it needs to be at. And if you are a long-term investor, dollar cost average on extremely good stocks that you believe in, not some random stocks, not Facebook. Facebook is rebranding into metaverse, right? They have run into essentially a bottleneck where they had to make a change. Meta is going to be completely different and isn't going to take effect until 5 to 10 years down the road. So don't expect Meta or Facebook to turn around and go back to all-time highs. Now you might get some pumps here and there, but in my mind, that company still has a ton to prove. But it does have Zuckerberg, so you can say, you have to give the man, he is still a very smart guy. But being said, again, that is your call. Again, this is not financial advice, but for me, I'm looking at other ones that are better off suited to be recession proof. Your Teslas, your Googles, your Apples, right? It's not saying they won't get hit. Everybody's going to get impacted, and we're seeing that. So don't think that no one's not going to get impacted. Commodities are running at ridiculous numbers that haven't been seen in a very, very long time. So anyway, let me get into watch list. Tesla, AMD, and NVIDIA. Now these two, I keep bringing these up, but you have to be very careful with chips. If there is any sanctions coming out with semiconductors, these things will continue to tank more. Some of these have actually broken some supports, but a lot of just coming into this week, I'm short biased on the market, obviously because we are coming into the Fed. There's going to be a lot of fear coming into this meeting, so you got to understand that the market's going to sell just in anticipation of what's going to happen here. And then if they overshoot, right, if they come in and say, oh, we're not going to do a 25 basis point until July, but we're going to stop bond buying, the market might actually rally from that. Or we get a ceasefire, the market might actually rally from that. Very short bias on Amazon. It's broken some good levels, so looking for those retests on that. One thing to keep in mind is banks have been getting essentially beat down with all the other stocks as well. but value stocks have been running. So I do like CAT for this week. That's the only long bias. I do like Tesla long bias. If we do churn, you could even add Google on here as well. Google is one of the good ones that turns quickly. But that is what I got for the watch list. Now, looking at the market in itself, we're still in this downtrend, obviously. Watching this key level, the 4150 mark, something I've been talking about all week. We did get a bounce out of it this week, again, ranging up to that 4300 mark. We have to really see. My biggest concern this week is this monthly EMA support here. We break that, we could definitely be in some trouble because there's a long ways down from that point. That's saying that there isn't any support along those levels, but uh, I think at this point we've really come to a. I think we're close to a turning point. Still, I think we're going to rally and continue to chop and play this nasty game for majority of this first half of the year. And then the back half, I'm still very bullish on the back half. We just have to get through this current situation, this cycle. You have to understand everything's going to come in cycles. The whole market is just going to continue to keep selling and selling. Bear markets, again, I don't really see that happening. Everybody is talking about a bear market. You have to understand there's so much money in the system. The Fed is not going to be able to do much as far as liquidating that money. It's going to take them a long time. So being said, we got tax credits and everything coming back in, so people are going to gobble up stocks, crypto, real estate are some of the biggest things that people are going to go for. So we really have to see how this week is going to play out. If we do break again, I think we'll continue just to play this channel. I don't see us breaking back below this channel again, unless there is complete fear coming out of nowhere, coming out of left field. This market just isn't going to crash. It has to be. Everything that we've known so far has been televised. This is why we're getting chop, because it's uncertainty. We're not going to just completely fall off the map again unless something completely escalates quickly from what's going on with the war, or we get some random black swan that's going to come out of left field and we have absolutely no idea what's going to happen. That's when you start getting these limit downs and crashes, not just with what's our current situation. There's just a lot of things going on with the Fed, the rate raises, and then again you have your the situation going on with Russia and Ukraine, and how it's affecting supply at this point. So again, the ceasefire, I think we would actually rally, break out of this. I'm not saying we're going to make all-time highs. I don't think that's going to happen. Not until the rate raises are cleared up. So you got two different situations that have to be. We need better clarification before we can actually start making moves towards upside, having longer rallies as opposed to these day or two rallies and then this chopping. But once we do break out of here, I think we're going to get a nice little rally, which may lead into some more selling. But this whole move here might continue to do this until leading into the next earnings. It's kind of what I'm thinking about. So that brings us to the end of March. I think at the end of March, we'll have an idea what's going on with Russia and Ukraine. We have an idea what's going on with the Fed as far as their time frame, what rate raises they've already put out there. And then I think we can start doing some sort of push up at that point. I think it could actually be a very explosive move from that point. But again, I think we're definitely have to watch how that goes. We could explode and possibly retest all-time highs. I just think it's going to be a very slow, choppy way on the way up because we do have a lot of resistance. Initial move, again, if that does happen, I think will be very explosive. But then again, we'll slowly chop all the way back up. And that's just my opinion on it. So again, watching those levels coming into this week. Bitcoin chopping, consolidating. Again, there's a lot of good news. Crypto isn't going anywhere. You can't say it is. The Fed is well aware of that, as they are trying to make Janet Yellen and and Biden came out and started talking about how this is becoming the new. They're taking essentially action uh, to make this a priority for the government to essentially figure out how each department is going to deal with taxes, deal with who is responsible for what. So that is a priority for the government now. And then again, trying to figure out a stable coin as well and how they're going to approach that. But again, unless we get down that essentially that 32 mark and break that, I am not concerned. I'm actually really thinking that 32 mark is the new base for Bitcoin. We've every time we've touched it, we've essentially wicked straight out of that. So yeah, I think once we get again answers, this will start running and go start making all-time highs again. In my opinion, again, it's something that has been using to combat inflation, and people are starting to buy more into Bitcoin as opposed to gold. So, because we've seen gold, it has pushed up, but it's starting to go pretty flat. I know in last year, people were buying more Bitcoin, and gold hardly even moved last year. Now, with everything going on with Russia and Ukraine, people would run back to their old habits, so they started buying gold again. But we're starting to see that separation again, where gold is selling off, but Bitcoin is pushing. So we have to keep that in mind. So going into this week, one thing to keep in mind too, I don't really talk about bonds that much, but if rate raises start getting pushed up, we might see a big move in bonds here. So I think bonds, even though I didn't add to the list, I might actually start watching bonds going forward. Now, that's not saying this will work 110% here, but again, depending on how the Fed continues to buy bonds, if they completely stop buying bonds, and then if what they're going to do essentially with the rate raises and how hawkish they're going to be, because I think this could possibly get a pretty explosive move out of here. Again, not saying it will. You have to just be mindful of that. That's why I say manage risk. Don't, especially in this market, you don't want to go all in on any move right now. Everything is still very uncertain, and a lot of things can sway the market, even as far down as we are. But the only thing I would say to be buying at this point is to buy something you're looking 5-10 years out, because these are going to be some great prices that you're going to wish you bought at. And I think you should be dollar cost averaging and not buying essentially in big lots at this point until the market completely gets to where it needs to go. But until we get answers, and then we can go from that point. But bonds, I definitely want to keep watching this week as well. And see how it's going to react with the Fed. Again, I think if they do start raising rates, this is going to start pushing up, which could affect the market dramatically. But we've already had, like I said, we've already had a lot priced in, so we have to see how it does work from this point. Again, if we hit exactly what they're essentially saying, or if we come in even at 50 basis points, I think at one point in January they were talking that we've essentially priced in worst case, so 50 points. But now they're saying, no, it's only 20%. There's mixed messages. So you're going to have to go off of what's essentially gone in. It's 15% on the index. That's good enough for a turnaround, right? So, I mean, we could go another 15%. It's a possibility, but I think you're going to need everything to continue to go very badly. And I just don't see that happening right now. It could possibly in another month might change that, but right now I think we're okay. I think right now, again, you're still seeing strength, so there's not fear there. Fear is when these candlesticks don't even bounce. People are just afraid to be in the market, and you're not seeing that just yet. So we will have to see going forward with the bonds, but. Tesla, one I'm watching, again, one of the best ones, one of the best stocks in my opinion, especially going through what we're going through. Got rejected again. On the trend line, definitely want to watch this week. I'm watching for that 724 mark. It needs to break this 783 mark. If Tesla breaks 783, I think we're going to revisit this monthly support at the 722 mark. So floating around that 700 as where we bounced out of last time. If we do break that, could be concerning for Tesla. I think Tesla could come down pretty low. Again, you're going to have all your, your 650 or 600, essentially those nice round numbers, those psychological numbers that people are going to buy at. So coming on the way down. But again, your 50 EMA on the monthly is way down at 485. I think things need to go really, really bad very quickly before, if Tesla is even going to consider going that low, especially being it's essentially one of the safe havens out of all the stocks. Even Apple, I mean, hasn't moved, but from that point, you need to determine where it's going to go. So again, watching this, I think we could revisit the 824 one last time before we start selling. But ultimately, Monday, if we break, again, like I said, if we break that 784 mark, or 780, we'll go 783. If we could break, if that candlestick can open below 783, I think we're going to 722 very quickly. And then we'll catch a bounce off of that. Obviously, if it's a support, you'll catch some sort of bounce off of that. And then we'll see if we consolidate around here going into the Fed, or if we actually break and continue to sell. Now, if Tesla does break and continue to sell, that can be a lot more concerning for the market. Again, you want to watch industry leaders. If they aren't showing strength, the rest of the market's going to come down with it. AMD is the other one I have. Now, this one, I said before, AMD, I do like the wedge on this. Again, you got your support at essentially that 100 mark. You don't want it to break 100. It breaks 100, this thing is going to start crashing down quickly. You can take this short or long, either way. I'm short bias this week, so if it breaks this 100 mark, I'm looking to short this. But ultimately, on the retest, you want it to have a clean break. Then the next candlestick, this is why I go after hourly. The next hourly comes back and retest that. That's your entry point, because you want first attempt on a retest, and then you'll have a bigger move off of that. And so that's what I'm looking for on AMD. Aside from that, if it can hold 100, looking to enter, right, and keep your stop right underneath, and then see if we get a bounce. So you need a bounce at least back up to some of these other levels. You're looking back at the 110 mark, and then possibly, I mean, if we get some good possible news, ceasefire, like I've stated, or if we get some other news, we could pop back over this and then start breaking out. But these are getting in really good spots for possibly big breakouts. Or you could just wait for a break. Like I said, you wait for the bottom break, or wait for the break on the daily on the trend in a retest, and then that's when you get your entry. Those are probably the best things to do right now, considering the circumstances. NVIDIA is the same exact way. You have the same wedge. It is holding the 112 mark, so you really don't want it to break that. It's playing up to this range of 235. So we're kind of watching and seeing what does with that. So again, same exact plan. You can wait for the break here at 208 in a retest for possible puts, or you could see if it holds and go long. A really tight stop on this. Again, you don't want to catch this if it breaks and goes to the downside, or you could just wait for the break. Best when things are starting to get really tight on these movements here, it's best to just wait for a break. Don't jump in and expect it to go one way or another, because that's how you get chopped up. And again, unless you're investing, and then that's a different case. But ultimately, NVIDIA, I think, is in a really good position, just like AMD, break to the downside and possibly break to the upside. I think they need to be on watch. Again, biggest thing with chips is you need to be mindful that if there's any kind of sanctions placed on semiconductors, that you're going to see a massive tank, which will essentially bring down the whole market because everything is running off of chips as well. So you have to be mindful of that. And chips, again, they've shown strength, but they're very sensitive to sanctions. So you want to just definitely keep that in mind, be nimble when it comes to that. Now, Amazon, I really like Amazon to the short side this week. Again, we had that stock split news, so it pumped this stock way back up. But what I'm actually really watching is this 29.45 mark. We've broken back below it. So I'm actually kind of looking for on Monday is looking for some sort of retest. I don't know if we're going to get any kind of bounce. I think we can get some kind of bounce just because we sold off so much on Friday. And then I think we can get a nice bounce up to here. Looking for some put entries going into Wednesday. And then possibly some selling back down to the 27.50. Now, there is stock split news, but you have to understand Google has also had stock split news and it sold off dramatically. This isn't a couple months ago when you got stock split news and this thing ran, 500-600 points. I mean, you already got that move overnight, pretty much. You get about 100-point move or so overnight. So I'm looking to capture that same move to fill this gap on the downside this week. So this is probably one of my biggest plays I'm looking at this week. Definitely high priority to fill this gap on puts. Because of that fact. But again, I'm watching that 27.42 mark is my price target for that particular move. And again, looking for a put entry around that 29.40 mark. Then make sure you adjust accordingly. Again, in this market, you don't need a lot to make a lot because this market is having some really volatile moves. It's good and bad all in one sense. It just depends on the way you are taking the trade or taking your investment. Again, this really is an investment move. This is more of a trade move, but nonetheless. And then the last one I do have is CAT. Now, CAT, the thing about value stocks have been holding very well. For me on this move, I'm really looking, since we broke, I'm really looking for a retest of the 205 mark. Now that it's broke, I'm looking for that first retest of the 205. And buy in there and look for another pop on this. Like I said, the first attempt after a break is going to be your best move, and then after that, so you might get continuation, or you might get another break back down to the downside. So, but for a value play, since I haven't added very many value plays, I wanted to add CAT this week. Trying to keep it on watch. Could even possibly be one to the downside, but because there is quite the move up here from what's currently standing, the 215 down to the 204 mark. But for me, I'm just going to wait. I'll wait for the retest as opposed to trying to short this. Like I said, I think short play this week would be better for Amazon as opposed to CAT, just because tech will sell quickly given the circumstances with inflation and rate raises. So I think that will ultimately sell off a lot better. You're looking for the faster move when you're looking at shorting a play. You want the faster move, the bigger move, as opposed to something like this that's been holding up. But so that's why I'd be wait for this to actually go back down here to that 205, and then take long calls after that and start pushing up from that point. But if you've made it this far, I appreciate you. And remember to be mindful and nimble. And until next time, I'll see you guys later.